Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello everyone, this is Yazad. Thank you very much for being here today. Nickel stocks are on fire, and in today's video, we are going to be talking about the top 3 Indian companies that you must watch out for. Tracking the footsteps of crude oil, other key commodities also hit multi-year highs in the backdrop of the ongoing Russia-Ukraine conflict. Nickel prices have risen by more than 100% in recent days as a result of this conflict, which has caused the scarcity of the metal, threatening to impede manufacturing of batteries for electric vehicles. The rising prices may potentially have a huge impact on the EV industry's profitability. Prices of nickel soared by as much as 111% on 8th March 2022, momentarily surpassing $100,000 per ton. The London Metal Exchange suspended the trading of nickel after prices more than doubled, reaching a record high of $101,365 per metric tons in early trading, after closing at just 48,078 per metric tons the previous day. To get a clear look at the chart below. Nickel is mainly used in the production of stainless steel and other alloys and can be found in food preparation equipment, mobile phones, medical equipment, transport, buildings, and power generation. The biggest producers of nickel are Indonesia, the Philippines, Russia, New Caledonia, Australia, Canada, Brazil, China, and Cuba. Among these nations, Russia is one of the world's biggest suppliers of the metal, and the fear of sanctions or the inability to ship the metal has spooked an already tight market. India is one of the biggest importers of nickel. To reduce the supply constraints, many top Indian players have started pushing their nickel production capacity to meet the increasing demand. Take a peek at these top 3 stocks that are set to transform India's nickel industry. First up, Vedanta Ltd. Vedanta is an Indian multinational mining company headquartered in Mumbai, with its main operations in iron ore, gold and aluminium mines in Goa, Karnataka, Rajasthan, and Odisha. It's a well-diversified natural resource group engaged in exploring, extracting, and processing minerals and oil and gas. The group engages in the exploration, production, and sale of zinc, lead, silver, copper, aluminium, iron ore, and oil and gas. It has a presence across India, South Africa, Ireland, Liberia, and UAE. Its other businesses include commercial power generation, steel manufacturing, and port operations in India, and manufacturing of glass substrate in South Korea and Taiwan. Moreover, the company is the largest private sector crude oil producer in India. Recently, in an interview with a leading financial daily, Anil Agarwal, Executive Chairman of Vedanta, said, "In these geopolitical situations, we have to be self-reliant. We produce practically the entire spectrum of commodities. Nickel is also very important. We are trying to acquire a company for nickel under the IBC process. Now the company is planning to start commercial production of nickel alloy by April, with a capacity of around 3,000 to 4,000 tons. In December 2021, Vedanta acquired Nicomet, producer of nickel and cobalt in Goa, for an undisclosed amount. With the acquisition, Vedanta became India's sole producer of nickel. The move is a significant step in Vedanta's mission towards making India self-reliant in key critical minerals. The acquisition of Nicomet is in line with Vedanta's environmental, social, and governance mission and is a big step to support India's carbon neutrality goals. Due to the Russia-Ukraine conflict, the value of India's nickel and cobalt imports has been growing rapidly. With Vedanta's foray in the production of these critical minerals, India will be in a better position to manufacture EV batteries, the main component for EV vehicles, and support the production of high-quality steel products, a key building block for infrastructure growth. The acquisition comes at a time when the nickel market is tightening, with a surge in battery demand, supply chain disruptions, and an increase in global stainless steel production in recent years. The stock of the company has delivered good returns of 70% to its shareholders in the last 12 months. On a year-to-date basis, it has rallied up to 8% in a subdued market. The second company on our list is Hindustan Copper Ltd. Hindustan Copper is a government-owned corporation in the central public sector enterprise under the Ministry of Mines, India. Hindustan Copper Ltd is the only vertically integrated copper producer in India engaged in a wide spectrum of activities ranging from mining, beneficiation, smelting, refining, and continuous cast rod manufacturing. The firm holds a lease on more than 80% of the country's copper reserves. The company has well-developed infrastructure facilities, vertically integrated operations, and wide distribution network with well-established customer base. HCL's main products are continuous cast copper rod, copper cathode, and copper concentrate. Copper sulfate, sulfuric acid, anode slime, and nickel hydroxide reverts are its byproducts. Demand for copper is set to increase due to the thrust on renewable energy, increased use of consumer durables, and increased use of electric vehicles. All the clean energy technologies use nickel. Therefore, it is very important for metal manufacturing companies to increase the production of nickel in India due to the supply chain crisis caused by Russia's invasion of Ukraine. Back in 2016, HCL inaugurated the nickel, copper, and acid recovery plant in Jharkhand. This was the first facility in India to produce nickel metal of LME grade from primary resource. Last year, the government announced the privatization of Hindustan Copper. The stake sale may take place this year. Multiple investors, including the Vedanta Group, are said to be interested in picking up stakes in Hindustan Copper. In the past 1 year, shares of Hindustan Copper have delivered poor returns of 8% on the BSE. The stock currently trades close to its 52-week lows. And finally, on our list, we have Jindal Stainless Ltd. Jindal Stainless is one of the largest manufacturers of stainless steel flat products in India, used in a variety of industries like automobile, railways, construction, consumer goods, etc. The group, through its manufacturing plants in Hisar, Haryana, Jaipur, and Odisha, has achieved the feat of being the largest manufacturer of SS flat products in India. Its capabilities to make a wide variety of grades across all series of SS, mainly 200, 300, and 400 series, based on content of nickel and other alloys, helps the group cater to a diversified end-user base. The company's profitability is largely dependent on the prices of inputs, mainly nickel and chrome ore. The company has undertaken several measures that have improved its operating performance. The company's plant is in Odisha, which has 93% of India's chromite ore reserves and is supported by a captive 264 megawatt power plant, which meets the bulk of its electricity needs. While Jindal Steel is the largest SS player in India, it faces competition from imports, mainly from Indonesia, which is a low-cost producer of SS, as it has nickel deposits, and China. Recently, in a statement, the company's MD, Abhyuday Jindal, said the company has a healthy order book and is mainly focusing on exports. So the impact of Russia-Ukraine war on its business is not much. He further added, among other uncertainties that the world is currently facing, we are witnessing never-seen-before spikes in prices of nickel. As a proactive step to address volatility and contain risk, we continue to follow a prudent risk management policy to sync our sales order and raw material booking on a real-time basis through increased coordination between our supply chain stakeholders. As the company has low dependence on Russia for raw materials, the company's stock has not seen any major move as is visible on many commodity stocks these days. The company sources majority of its nickel from scrap within India, Indonesia, and some quantity from Europe. It remains to be seen how higher nickel prices will affect the company's bottom line. Over the year gone by, shares of the company have gained a massive 150%, while in the recent week, the stock fell 8%. What next? As Russia is one of the world's biggest suppliers of nickel, Sanctions and supply shortage fears have spooked an already tight market. Where nickel saw the biggest daily gain on Monday, liquidity deteriorated dramatically as sellers rushed to the sidelines. This led to a steep rise in prices. Nickel is a key ingredient in stainless steel and electric vehicle batteries. According to reports, more than 70% of the global supply of nickel goes into making stainless steel. While only 7% of nickel supply goes into EV batteries, the metal has been in talks because of the exponential growth prospects of batteries and is projected to see a boom in the coming years. In recent years, automakers have discovered that adding more nickel to the cathode can boost a battery's energy density, which translates into more range per pound of batteries. Now, with concerns about supply, automakers may see a bump in the road for their EV plans. However, not all EVs will be affected, but prices for a few will go up. And with that, we come to the end of today's video. Thank you very much for watching. Happy investing. Goodbye.